Good afternoon and welcome to Bull Market Stock Show. This is your host Rian Hobson, and we're doing actually today the numbers that came out yesterday. That was now out of the United States, which the GDP figures, and then this morning also I was looking at Germany's actual GDP figures that come out, and then it was also the inflation number of the euro area that came out. Now, the inflation numbers was up in Europe. It actually beat expectations. It was at 3. The forecast was at 3.7%. It came out at 4.1%. That was now the CPI numbers. And then you look at the GDP figures out of Germany, there's a hell of a slowdown there. But if you look at overall example, which I will explain to you in detail, the unemployment numbers look good, the GDP numbers look bad, but then you have inflation as well. So look, to be honest with you, this doesn't make sense and it doesn't look good at all, because this is not normal economics that is currently happening. And this looks for me like a recipe for disaster.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good afternoon, welcome back to Bull Market Stock Show. This is your host Rian Hobson, and please don't forget to subscribe to my YouTube page and also the link below, which is from markets.com. Please fund your account with $250 and then I will give your classes absolutely free. Now, the story with the GDP story of yesterday of the United States, and then also there was job claims that came out yesterday. The job claims number came out at 287 and it was at 290. That was expected. So that is actually, it sounds like a good number. And then you have the GDP figure that was totally a disaster yesterday. They expected a 2.2. It came out at basically at 2%. Now there's a slowdown in the United States that is currently happening, and that means that, and the inflation is going up at the same time. And then surprisingly, the dollar was actually picking up today. The euro, the British pound, and even yesterday, if you look at natural gas, there was also crude oil inventories, crude oil prices that were also going down. Gold, of all things, is also going down, and that was now yesterday. Even with the weaker dollar that was yesterday, was temporary. Today, it actually went up, which is now the US dollar. And then you have the euro that was down, and then your British pound, and also other currencies that were going down. So this means there's actually nonsense that is actually currently happening. Please don't forget, there's also the Canadian news that will come out later today, which is up +2. And then you have your PCE inflation, which is also a very important indicator for the United States. Now, I'm just actually put down a few figures to you here. We have we have the United States. This was the GDP yesterday. Okay, this we all know. This was now from the pandemic, and where they opened the day 4.5, 3.6. This is quarter to quarter, and then you have a 2%. That was now yesterday announced. Now that actually is quite a large jump from 6.5, 6.7% to 2%. That was now in the United States. And then we go over to Germany. Now, this is the reason why I use Germany and the United States, because obviously these numbers came out, and these guys are actually big players in the global economy. So now you have 1.9 and you have 1.8. It's quite a stagnant story here for actually Germany. Now, this is the important part. This is the inflation of the United States. Now, it's sitting currently at 5.4%, and you have a GDP growth that is actually declining. Look, that is now not sounding good at all. And then you have Germany. Now, this is the growth of Germany. It's stagnating, but you have inflation that is on the rise in Germany. So where the hell does this inflation come from? Now, one, they say is the energy cost. That is what the inflation push up. And then they said for the Germany's GDP, that is to do with the supply chain problems. So there's a bottlenecks and all of those things that is currently happening. And that's why the economy is not growing. Now, very importantly, Apple's numbers also came out yesterday. They were also complaining about the supply chain problems. And then also Amazon was the other one that also gave out earnings yesterday. They also were talking about the supply chain problems that is currently happening, but they miss estimates. That is now Amazon and actually an Apple, because of these basically supply or bottlenecks that is currently happening. Now, one thing that I know in economics, once you have inflation going up and GDP that's going down, then this is actually a recipe for disaster. On the other side, if I just share with you now, this is a long-standing problem with Germany. The labor shortage is deepening in Germany because of the aging population that is currently happening. And I did wrote this in my book, in the Ultimate Depression. They have a labor shortages. And now with the whole printing of money in Germany, or I would say in the whole entire Europe, and spur growth on, that will actually lead to more problems, and that is what we're facing now. There is not enough, I would not say there's not enough skills. The people are basically old in Germany. And you can actually look at it, and that causes now bottlenecks in the whole entire system, not just in Germany, but across the world, basically causes now bottlenecks. In the United States, it's exactly the same story. Now, this is the unemployment rate of the United States. It actually came down at 4.8%. In Germany, it's actually at 3.4%. Now, just to go back to the United States, yeah, we all know the people are leaving the jobs there because of the passport story. And the same thing is happening actually in Germany, is because of the passport story. People are actually basically fed up leaving their jobs, and now that causes actually a supply problem. Now, if people actually leave their jobs, which means products need to increase because it can't get faster to the shelves, and then that causes actually prices to increase and also inflation to increase, and that drags down the economy. Now, if the GDP numbers look like that and inflation is going up, that is all to do because people are leaving their jobs. And it could be that people are basically old. Now, what will that say to the market? Well, the market is not right to buy in with the dollar and also bond yields that are actually spiking up because inflation is a reality, because people are leaving their jobs. Who the hell is going to do the job at the end of the day? So that is actually a situation that is facing to Germany and actually in the United States, and that also transpire actually in Japan and in China, which is also a problem, and also the energy problem. This is definitely not good signs. For now, the dollar looks, it performs well because of these global problems that is currently happening because of the safe haven. The main thing that I told you guys yesterday is also the story with gold. Gold is going absolutely nowhere. Absolutely nowhere. I was looking at it. I thought it would be now at 1900. The big question is gold actually the inflation hedge, or is it inflation hedge, or is it now Bitcoin? Because Bitcoin is actually doing okay, I would say. At 60,000, I thought it would be higher by now. But gold on the other side is actually very disappointing because I thought gold would have gone up quite strongly. Maybe gold will go up maybe late December, which it always does. But for now, there's quite big question marks there because is gold really the inflation hedge? Or is, if the main thing, or are we preparing for a deflation? Because if GDP numbers look like that, then we might see a slower growth and also inflation that starts to decline sharply later on. It's quite a confused story in the market, but I would say you guys have to be very cautious today when it comes to trading, because with Apple missing estimations, GDP figures are missing estimations. I would say be very careful for the market today. And maybe you can take a break and maybe trade on Monday because things are really not looking good at all. That's all from my side. Please subscribe to my YouTube page, register your account on markets.com, fund it with $250, and I will give you class absolutely free. That's it from my side. Lovely weekend. See you guys on Monday. Bye-bye.